Good evening, everyone. Welcome to tonight's webinar on the practice transitions as we look through how to protect the value of your practice through the dental office lease. Just going to give it a minute or two because I can see quite a few people joining. Whilst we're waiting for some other people to join, there will be a poll questionnaire that you'll see come on your screen. If you could just spend a minute while we're waiting for everyone else to join, just to fill that in, that really helps us to make sure that the content is driven towards people's specific situations in terms of what your current situation is, purpose of taking the course, if you have a lease, you're interested in the consultation. And then we'll give it another minute before, and we'll jump in. So if everyone's taken the time to just fill that poll in, thank you very much. And again, welcome to those that have just joined. There is a poll that you may see on your screen. If you can just fill that in, that would be great. And yeah, good evening. Welcome to tonight's webinar on practice transitions. Delighted to be joined by Sevan Kadian from Tier 3, part of Henry Schein. Sevan and I, Sevan will present first, and she's been at Tier 3 since it launched in the West Coast, and she's got 15 years of experience in marketing and customer service and extensive background. So she's going to take the first part of the presentation, which is really fantastic, some good information and really beneficial, and then we'll dig into some of the lease with myself, Lee Tessler, who's one of the senior consultants here at Cirrus, been at Cirrus for nearly 4 years now. We want to try and make it an interactive, so we will leave some time at the end for some questions. There is a question and then a section on Zoom, question and answers. So if you do have questions, feel free to put the questions up. We will definitely spend some time to go through some questions. So without further ado, I will pass you over to Sevan. And enjoy.
Thanks, Lee. If you want to close your screen down, I can share mine next. Thank you. All right. Hi, everybody. And again, thanks, Lee, for the intro and having me join you tonight. So my name is Sevan Kadian, and I'm a transition specialist with Tier 3, like Lee said. And a little about us. Tier 3 has been servicing dentists for about 40 years now, coast to coast. And at the beginning of 2021, we joined the Henry Schein team, so representing their transition sales team for Canada. So it's been an incredible boost for our clients with that sheer volume and reach that we have now. So being able to tap into Henry Schein reps across the country. My partner, Patty Ann Jones, isn't able to join us tonight, but her and I work together on supporting dentists all over BC, from Victoria to Prince George. So some of the topics we're going to cover tonight are, again, following up. It's still a hot topic, obviously. We're not out of it yet, but what did COVID have as an impact on practices? So we know that there were decreased billings from more than 3 months or more of closures. There was decreased earnings as a result. And something that we're still seeing is the labor shortage. So that became a real problem for everyone, especially to have hygienists and chairside assistants. So even when offices were ready to go back, they couldn't because of staffing shortages and competition in wages. And we're still seeing a lot of that. And of course, increased supply costs. He might even have an abundance of overpriced supplies because I think we all developed a bit of a hoarder mentality over the pandemic. So the impact that it's having on selling prices. We've seen plenty of clients bounce back from this. So fee guides have increased to offset some of the rising costs that came out of it. Monthly billings are getting back to normal, even higher than normal, which presents a problem of itself. We have clients telling us they're beating pre-COVID numbers over the past year, and we've had to burst the bubble a bit because that's something that we're seeing a lot of. And the real factor is that there was a backlog of dentistry from that time, and it created a bit of a boom in the dentistry revenue. So a better way to evaluate where you're at coming out of COVID is looking at your hygiene programs. So if you have those numbers back to pre-COVID levels, then it's a much more reliable sign to purchasers and financiers that you're fully recovered. Borrowers are always going to want to see a healthy hygiene program if you're hoping to get top dollar for your practice, because it's kind of the cash cow that carries on with or without you. And then patients are mostly back, but taking a look at your hygiene compliance is really going to give you that good sense if you still have patients that haven't returned. Getting them in the door is totally critical at this time. Buyers are still looking. We have so much interest from purchasers and not enough supply. But it has to be a good investment for the purchaser. There's a fine line when it comes to selling your practice, that finding ways to attract a purchaser that can picture themselves there and coming up with ways that they can make it their own, increase revenue is so important. They don't want to buy a practice that needs a ton of work, but they also don't want to buy a practice that they don't think that all the dentistry is done and there's no room for growth for them. And we all know the saying, show me the money. So if we can show potential purchasers and the banks that money's back, then your value will have rebounded. So if you're not quite there yet, it's okay. I just hope that you can walk away from tonight with a few areas to focus on. So when it comes to your lease, your landlord, and COVID, as you know, landlords have had the upper hand for so long. Rent keep going up, terms keep getting worse, and rent being one of your biggest expenses after staffing and either before or after supplies, it's a big deal. So I'm going to share with you an example of how negotiating your lease terms can make a significant impact on your selling price, and I think you'll be pretty surprised by it. And COVID just really gave you a window of negotiating room. Commercial real estate's been suffering through this, and landlords don't want to see dentists go as their tenants. You're reliable and bring good foot traffic to the area. So I'm going to ask you a simple question. So ask yourself, which have you been thinking is the most important determinant of your practice cash flow and selling price over the next 10 years? So is it the annual rent costs agreed to in your lease? Is it the length of your lease term and extensions? Or is it the various clauses and conditions in your lease? So just think about that for a while, and I'm going to go through how you can leverage negotiations to your advantage. So here's a sample practice. Don't get hung up on the numbers. It's just an easy breakdown. So one of the first things we get asked when we do a current is like, what are the current earnings multiple and what do we calculate it off of? So at a glance, here is something we would put together to come up with the earnings after expenses and dentist compensation. So we take that number and apply it to an earnings multiple to come up with the value. I know that there are methods out there and they use the revenue to come up with the value, but not understanding the expenses and the cost structure for practice is a surefire way that you're going to have a lot of red flags come up during the negotiations if you haven't factored these in up front. So while it's just a simple calculation, we do a deeper dive into your finances and remove all the non-practice expenses that are applied to it, and that'll help you give you in the practice the highest value we can. So taking a closer look into this, so specifically at the rent here. So maybe your landlord wants to raise your rent, or maybe you're going to them because you want to change some changes to your lease. So either way, let's pretend that comes up to get that. Then you want to use this to get what you want, and you need to give them probably a significant bump in rent. So say we decided to talk about going with a 20% increase to your rent. So that takes it to $78,475,000. Outrageous, right? Who would agree to a 20% increase? But taking this in and understanding what that means to your value of your practice. So you take the base rent up by 20% means that your selling price would have to change since your expenses are changing. Your revenue isn't, so that's the only thing that's changing. So doing that simple calculation, you're going to be losing $55,000 on your selling price. I know that sounds terrible, but trust me here, I will get there with this. I'm going to show you something that Tier 3 does in our appraisals, and we create a 10 to 12-year forecast. So that showcases our methodology. This is a method that banks will use when a purchaser comes to them to ask for money to buy your practice. Doing this up front will ease any surprises down the road and and minimize risk of the deal falling through because the appraised price doesn't make financial sense to the people putting up the money, the banks. So we're going to look at this first column in year one, because after that, it's just inflation. So we know that we've taken that simple calculation I showed you before. We've also taken taxes off that number to come up with the cash flow. Cash flow is what the banks are going to look at as money available to the purchaser to pay back their loan with. So breaking it down into a loan repayment plan next. So this shows us the loan coverage ratio that's applied to determine if the cash flow is sufficient to support the loan. So banks like that ratio to be hovering around 30% at the lowest. And you can see here that we've kind of pushed it a bit in the first few years, but how a purchaser can demonstrate to the banks that the salary that they're making that we've already deducted could be more than enough to cover up any gaps that come up in the first couple of years. So we want to give you as much value as possible. So we do try and push that a bit. So great, banks are happy, take the money, good luck. But then there's these things that come up in your lease, and I'm going to give you a few examples here. So what if you only have 4 years left on your lease with no renewals? Or what if there is a reno, demo, termination clause in there that can be triggered within 4 years? What if there's a relocation clause and you're entirely on the hook for the costs involved? And I'm sure Lee is going to and could help fill in the blanks with some other sneaky terms that get put in there. So here's a real life example of something I just am recently working with. So this clause here allows the landlord to terminate the lease with 1 year's notice to either demolish or significantly alter the building, whatever significantly means to them. So compensation to the tenant is limited to the undepreciated value of the leaseholds. So the book value of our client's leaseholds is about $12,000, whereas a move of a similar size facility at $250 per square foot, it would cost over $300,000. So we noticed that in the area, there didn't appear to be any development and the building was really busy, but banks and purchasers will build in that worst case scenario when considering a purchase. They don't really care about those other things. So if there's anything like that in the lease, the bank's gonna 100% want to adjust for that. So here what we've done, so in year 4 here, we've included a relocation cost, a capital investment into year 4. So we've used that $250 per square foot to come up with a number. But now that we've done that, that loan ratio we talked about is looking really bleak, especially year 5 at 20%. So that's a red flag to a bank, and they're not going to go with that. So even if they decide they'll give you a 10 to 12 year loan, sometimes they'll just give someone a loan for the time that the practice is certain in the space. So in this case, a 4-year loan only. Not many people can swing that. So for us, we have to adjust for that loan coverage ratio in our forecast. So we would need to drop the price of this practice. In this sample, this practice faces losing hundreds of thousands of dollars. You can see there, $300,000 to $425,000 in selling price drops. So just because one of those clauses in the lease. So looking back now, that $55,000 bargaining chip isn't sounding too bad. It's worth noting that while the right buyer might come along with the right financial situation, and the banks might be lenient with them because they work with them before. For example, if they own other practices and the banks can leverage on that, but these buyers are so rare, and banking on finding one of them, pun intended, that fits that criteria, this will be a huge issue for you and waiting period to try and find that right person. So to go back to that simple question I asked earlier, so definitely the things that you need to think about are the length of your lease term and extensions and the various clauses and conditions in it. Could save you a lot of money there. So here are some of the key takeaways that we just went through, but something to keep in mind is that there are quite a few options available to you on how you navigate working with a tricky lease. This was purely just one example to show you how much money we're talking about leaving on the table if you aren't addressing these areas. Especially with people who specialize in it, because you better believe that the companies you're renting from have a team of people that also do this for a living. So it's our job as professionals to go to bat for you and give you the best advice and options available. So I know that there's going to be a poll available to all of you. So if it's something you'd like to talk about, if you want to talk about the appraisal process, definitely make sure to click on that and I'll be in touch with you afterwards. Thanks so much.
Thank you. Thank you, Sevan. I mean, we've worked with Sevan and Tier Three for many years now, and as she was saying, that the amount that you can actually leave on the table, or vice versa, if you secure remove some of these outstanding liabilities and demolition clause, relocation, and we're going to touch on some other provisions, but as you can see, it's $200,000-300,000 worth of savings there. So I'm going to take this screen from here, and if I can just switch my screen, that would be good, which it's not letting me do. We knew this was going to happen. Okay, while I'm just fixing my screen, you can see that there's a poll there that if you are in a situation where you're 5 years away from selling, or would you like Tier 3 transaction specialists to reach out to Sevan to discuss your situation in a little bit more detail, then please take a minute to fill out that screen. Sorry, my apologies. My screen is not letting me do that now. All right, let's try this then. My apologies here, we're having some technical issues.
I can answer a question that popped up while you're figuring that out, Lee.
Yeah, please do.
Sure. So a question came up in a practice evaluation: how much of a benefit is it to own the property outright? So by all means, owning the property is a huge advantage because, of course, you decide the future really of the purchaser. So you can offer them the lease to be able to get them the financing they need, or you can decide to sell the property along with it, which is obviously a huge selling feature, especially in a hot real estate market like in BC. But it also helps purchasers decide their future, so they're not worried about what's it going to look like for them when they want to sell. So yes and no, it can be a huge benefit to own the property, but it can come with its own predicaments as well. We've definitely worked in scenarios with people with their own property, and there's cost share within a different building, or sharing the space, or how the property is held within the corporation, and sometimes there's implications of removing it to be able to sell them if you're not selling them together. So lots of things to think about in that question, and of course, talking to your accountants and like someone like myself, we can help you figure out exactly your best route if you do own the property, of how you're going to move forward with that if you're going to be selling the practice.
Okay, I think we're back on now. Okay, so I always like to start my my presentation with these three numbers: 85, 54, and 80. Now, what do these numbers mean? So 85% of dentists have a lease that can prevent them from ever selling their practice. 54% of dentists across North America are overpaying in rent, and 80% of landlords structure their lease to give them the right to at least 50% of the proceeds when a practice is sold. Now, before you fall off your chair, I will go into a little bit more detail, and believe me, I've seen that happen. I've seen that written in leases. We certainly don't want to leave any money on the table for the landlords. Just to give a little bit background about Cirrus and who we are and how we've been representing the dental community for over 25 years now. Essentially, we're a healthcare and dental specialist tenant representation firm. We were actually founded by dentists for dentists in Western Canada around 25 years ago. And since that time, we've negotiated over 10,000 leases since inception. I mean, majority would say 75% we deal with dentists. We do other healthcare practitioners, general practitioners, veterinarians, rheumatologists, but majority is dentistry. And what makes us unique is we do everything in-house. So we have a team of attorneys and some of the background in healthcare. We have some former real estate brokers who've been with us for over 10 years, and we've even got some of our lease negotiators on staff that represented and worked for the landlord on the dark side, as we say. On an annual basis, we negotiate and represent over 500 doctors throughout North America, whether you're looking to start a new practice, relocating, expanding, just a simple coming up for, not simple, but coming up for a renewal, or you're looking to transition and sell the practice. We lecture at most of the major dental convention centers, the PDC, Greater New York. We really work with dentists nationwide. Now, as you can see from here, this is just some names that you may even recognize. It. There's some of the doctors that right across Western Canada that we've represented, and everyone said it's the best money that they've spent on their practice. Many of these clients have come back over the years when it's come to expand or renew the lease, or if they're relocating. We really have worked with lots of clients that even may be familiar to yourselves. Just in terms of a little bit of an update in terms of the markets, looking at BC and Alberta, I mean, the markets that I have calls every day. I'm sure Sevan, similar, like she said, that the people looking for spaces in BC, and the rents continue to go up. Calgary and Edmonton were hit a lot harder during COVID, so they've sort of steadied the rents. In terms of some of the vacancy rates, again, Calgary's been hit the hardest, up to sort of 18% in some cases downtown. Edmonton again, and Vancouver, as we said, is still relatively low at around 3-4% in vacancy rates. Hence the lack of availability in spaces people are still looking to get into in BC. So we pay for a lot of proprietary data. I mean, we're not brokers, but we do pay for a lot of proprietary data. We also have access to, over clients that we've actually worked with. So we see a lot of inventory. We get a lot of landlords that come to us, knowing that we have a good clientele looking to fill spaces. So, if anyone's looking for any particular data in a particular area, then we can certainly pull up some of the rental rates and vacancies in the area. And you have to bear in mind that a lot of the numbers it really depends on the location, where exactly you are, the demographic, type of building you're in. So we can certainly dig in a little bit deeper on a one-on-one basis if that's something that you would be interested in. I just want to touch on buying versus leasing. Many people who believe in terms that maybe they own the space, or they own the building and the practice, and the dental office lease. Why does that have why does that affect me? Or I own the building and it's not an issue. Well, there's a couple of things I just wanted to bring up in terms of being a landlord, or buying versus leasing, when you're actually contemplating which route you want to go down, or even if you've been practicing in a space for a long time and an opportunity comes to actually buy the building. So, and I have this question a lot, right? So, the pros of if you're buying the building that you're practicing in, that you become the landlord. You're not responsible you don't have to answer to anyone. You have greater flexibility on the space and freedom to control the property. You can earn rental income, and obviously from the real estate. It does require a large upfront financial investment, in some cases to buy a practice and a building. If you own a building and you're looking to sell both, can be difficult for an associate or somebody to finance both the building and the practice at the same time. Now, leasing clearly doesn't require such a large upfront payment. You do have greater working capital towards building out the practice, and then you have the flexibility to relocate or expand. In some cases, you could find the perfect building and the right demographic, and 10, 20 years later, things could change in the community, and you're stuck and you're fixed at that building and that space. So there are the pros and cons when it comes to buying and leasing a space. So how do we maximize our leverage? Now, I've been lecturing across the country for the last 4 years with Cirrus. Last 2 years more webinars than live seminars. But what I always try to explain is that the healthcare tenant has really become one of the sort of anchor tenants now. You statistically will stay in the same space for over 22 years. You have one of the lowest default rates in the country. It's not something that you can, you can't work from, at home. You have to be in the space. And, you just do the math. If you're looking at an average $5,000 a month rent over a long period of time, on 1 year, we're talking 60,000. 10 years, 600,000, 20 years, 1.2 million that you're writing a check for. And I'm not even including any of the additional common area maintenance, any other expenses, the rent escalations going up with inflation. And it's really one of the biggest checks that you'll write in your professional working time span, except for maybe your residential properties. So it's important for you to understand that from a landlord's perspective, you're a great tenant, and there's certain things that you want to make sure that you can protect the asset, the location and the asset of your practice. And if you're not getting that, especially now, we've seen during COVID times in certain markets, there's opportunities as vacancies have come around, and other landlords and other spaces come available, and there's deals to be done. So depending on where you're at, depending on what stage of your career, but if you feel like there's time that you do have to, maybe it's the time to relocate. I mean, all these things can be explored, and we can go into a little bit more detail, but it's understanding that you're an important tenant, and that's what we try to bring and portray. So, you may feel you're dealing with a landlord, you're dealing with that experience, commercial real estate, and all they do every day is deal and dedicate time to leasing. you don't have any experience on that real estate, you know, why would you? You went to, you know, graduated from dental school, and, you know, you're busy chairside doing what you enjoy on the clinical side of dentistry. Now, you didn't go to school to learn how to negotiate a lease, same as I didn't go to dentistry school, and wouldn't want you to put me in front of a patient. But what we're trying to do here is even out the field. Now, you will find that majority of landlords will have their own, you know, leasing agent or attorney or professional representation anyway, and you don't spend that much time dealing with them yourself. So, you know, we've been doing this for a long time. If you're looking and putting us together in part of your team, and suddenly we've had examples where the landlord actually, we've actually improved the relationship, because we do appreciate that you've got to work with these people for a long period of time, and, you know, we can take away some of the emotional side when it comes to dealing with these negotiations, because it can be tough. But as we'll touch on a bit later, we've got proven strategies. Once we have a motivated landlord financially, and they understand the value of the tenant, we don't derive any commission. We're remunerated directly by you, the client, and we'll tell you straight if it's a good deal, or if not, we'll keep pushing and until the landlord understands what type of tenant, and if you're not going to be looked after over a long period of time, then, you know, you may look to go elsewhere. So, I mean, I want to go into too much detail on this, but there's 7 financial negotiables in your lease. When we talk about the financials, if we were to break up a lease into 2 parts, the majority of you will have looked at maybe one or the first 2 pages of how much are you paying, how long are you paying for that, you know, is there any sort of additional expenses, and then the other sort of 30, 40 pages of the lease probably go in a drawer until it comes back to renewal time. So when it comes to negotiation, when we look at 2 parts, we look at the financials, which is the base rent. Is it what is the annual increase? Is it fixed? Is it going up with inflation? Is it capped at a certain rate? If inflation, as it is now, has been below 3% for the last 20 years, and now we're seeing a huge spike in inflation, which landlords are going to want to pass those costs on to their tenants. Additional common area maintenance, fixturing. Is there any free rent, tenant improvement, landlord work? That's just the financial aspects of the lease. What tends to get overlooked, as Sevan said, is some of the other legal provisions in the lease, the demolition clause, the relocation, that can have a real detrimental impact when it comes to selling the practice, as we will touch on a little bit further. So what you can see in front of you is an assignment clause, which is found in 75% of leases. So the assignment part of the lease really enables you to transfer the lease to another personal party, normally in conjunction with the sale or acquisition of the practice. And it can talk about some of the requirements if you were to sublease some of the space. If you want to just take a quick minute just to have a look over this, and we'll go over this paragraph, and we'll see if there's any red flags or anything that you can see. And I know it looks like a lot to take in. Believe me, I read at least 3 or 4 leases a day like this. So let's jump into to this. So the first thing that we see is that the tenant, if he wishes to assign or sublet the lease premises, then it has to receive, the landlord has to receive, they have to receive consent from the landlord. Now, this is very common. No landlord is just going to let you assign or transfer the lease to any Tom, Dick, or Harry without permission, which is understandable. If you're the landlord, you want to know who's coming in to take over the practice. Now, the problem that we have is any request for consent. What are some of the conditions for the landlord to accept this? Now, in this lease, it says that the landlord has 3 options. First option is to approve the tenant's request. The second is simply to decline the request. And the third is to terminate the lease agreement. Simply just by asking for permission to transfer the lease to another person or party, that the landlord can terminate the lease agreement. Now, this is what we call termination language. We don't want to see this in any lease agreement. We do see it far too often. This is something that we certainly want to address before it comes to selling your practice. Now, additionally here, it says the landlord shall have the right to revise the minimum rent to be paid during the remaining term of the greater of the current market rent on the lease premises, 15% greater than the current rent. So you say, Mr. Landlord, I found a buyer, good young dentist, going to take over the space. And Mr. Landlord says, sure, no problem. Just as it's written in the lease, I happily give consent, but just to let you know that I'm going to increase the rents by 15%, which they're entitled to as it's written in this lease. Now, if I'm the buyer and I've done my calculations based on market rents and suddenly I'm getting told that I'm going to be paying 15% higher, then I know first thing I'm going to do is take 15% off the asking price. Unfortunately, it gets worse. And this is just the one provision. So it says here that should tenant receive from the assignee or subtenant any rental income, cash, goods, or any form of consideration in connection with the assignment or the lease that is above current base rental rates in that fiscal year, the landlord is entitled to the difference and any other consideration. So if we went by my example I was speaking about earlier, if you were to pay $60,000 per annum and you're selling your practice for $500,000, essentially the landlord is entitled to $440,000 of consideration proceeds of sale. Now, their argument is you've been at our space for 30 years, our location, our building has helped build your practice. Now, to me, that's ridiculous. You've worked and sweat all the blood and tears, and he shouldn't be entitled to any additional or any consideration, any proceeds of the sale. You have to bear in mind that, unfortunately, as much as the valuation, as Sevan was talking about, and there's different ways of evaluating a practice, but they look at the goodwill and the collections and the revenues, etc., over the last sort of 3 years. They value the equipment, but the other thing is the lease. If you can't transfer the lease, yes, you may be able to sell your equipment, you may be able to sell the goodwill, but you're going to lose a huge amount of value if you actually can't sell the lease itself as well, and you can't transfer that, and someone has to buy your goodwill and your equipment and then has to relocate the practice. And the last thing, sorry, the second from last thing it says is that notwithstanding the landlord's consent, any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignees in the future. So you've got past maybe one or two of the other red flags. You've now been given consent from the landlord to transfer the lease, but the landlord says, just to let you know, if anything happens to the new buyer, you are on the hook. And we had a client that retired, moved to Florida, and got a call from the landlord 3 years after retirement saying, you know, hello, doctor, and sorry to be the bearer of bad news, but the buyer had taken on too much debt and declared himself bankrupt. And this doctor was on the hook for the remaining 7 years of the term. The last thing he wanted to do was go back and start practicing dentistry. So again, just in one provision, you can see how many red flags that there are. And we've seen this in numerous leases. The good thing is we've successful, and we have been, and we continue to be successful in you know, educating the landlord and removing a lot of these liabilities moving forward. So, you know, if you are selling to an accredited dental practitioner, that you should be, as long as they're, you know, credit history and everything, you should be able to sell, and you should be able to be released from any future liability. But it's not just a question of, and please, if you're looking and thinking, what does my lease look like? I'm going to ring my landlord tonight. That's not the strategy that we would certainly not advise to do that. We'll explain some of the strategies and how we're successful in achieving some of these wins. So just to reiterate, if you have a lease like that, when it comes to selling the practice, what's the cost of this mistake? The inability to sell the practice. If you're somebody's having to absorb significant increase in rent, if you're remaining, you know, the guarantor or liable or beyond sell, or even if you have to give the landlord some of the proceeds of sell, anywhere between 250 to 750,000 liability. Now, there are a number of other provisions. Sevan touched on the demolition and the relocation provision. As you can see, I'm not going to go through every one of these provisions, but there are a number of other provisions that, if not structured, if not written dental specific to your situation, can cause huge liabilities, especially when it comes to selling the practice. So this is a slide that we actually got from the landlord side, and I like to include this in my presentation because I think it's very interesting. Because what you can see here is, now we always recommend, if your lease is expiring, I mean, certainly you should know some of the critical dates, if there's any options or additional options. We always recommend to start the process at least 2 years before expiry. Now, some people will say, well, you know, that's plenty of time. Why do I need 2 years? And the landlord's not going to be interested. Well, what you have to understand is, one, if there is any sort of problem, if there is an issue when it comes to renewing, it can take anywhere from 1 year to 2 years to find a space, build out a place, and relocate. That's the first thing. So it just gives us much more leverage. Now, from a landlord's perspective, the reason why they may say, oh, we've got plenty of time, no problem, and you know, they may not respond or take their time, they want to get down to this sort of section where it's 12 months, 8 months. Very rarely will a landlord say to you, oh, you know, your lease is expiring. If you miss the option deadline date, technically your options become null and void. So the further away from the 24-month or the nearer to the expiry date from a landlord perspective, they know from a leverage standpoint that unlikely that you're going to be able to really relocate within that sort of 8-month, 6-month period. And you're pretty much going to have to sign what they put in front of you. Now, that's not to say that we haven't had success in negotiating if we've had a lease that's expiring in 12 months or 8 months, but the recommendation certainly is to start that process at least 18 months to 2 years before expiry, just to give us that leverage. Now, why have Cirrus, why have we been so successful in winning lease negotiations? Why have Henry Schein, Tier Three, why do they choose us as their preferred business solution partner for over a decade now to look after their clients? Simply for the reason that we're very successful at what we do. We are able to remove demolition clauses. We're able to, if we're not able to remove them completely, then we're able to put in some step downs or extend some of the notice period. Now, there's a reason why we're successful. There's a strategy. Once we have the conversation, we want to gather all the documentation. That's the first part of the process. If you've had a lease, if you've been in a space for 20 years and you have original lease, addendums, amending agreements, the landlord's changed hands. So we want to gather all the documentation, make sure we have all the critical dates. Then we want to understand and identify your career goals, where you are now, where you've come from, and where you want to be in the future. So we really want to look at it from a holistic point of view in terms of from a consulting aspect. It's not just about renewing the lease for now, it's for the long term. So after we've spent time reviewing the office lease for any sort of liabilities, any area of risk, we then prepare the market research. Like I said, we'll look at some of the current rental rates and vacancy rates in the area, see what other landlords, what other vacancies, what other properties, what the availabilities are. And then we will develop the strategy. Now, one of the things that we haven't even done, and we're part of this cycle at Section 5, we haven't even reached out to the landlord at this stage. So we've gathered the documentation. We understand you, as a client, as a dentist, where you're at, what you're trying to achieve. We know all the sort of red flags. We know all the information about the area, the market research, and that's before we reach and approach the landlord. We normally spend probably 15 to 20 hours on the financial negotiations, the economics of the lease. And from our experience, once we have a financially motivated landlord, what you have to understand from their perspective, they are looking at their net effective rate, the rent roll, like what their bottom line is. Who is the tenant? How long are they going to be in the space for? And how much rent are they going to be paying, right? So once we have the landlord motivated and understand that we want to be here and we want to be here for the long term, then we, on our experience, is much more successful, and the landlord is more motivated to make some of the changes to the legal provisions in the lease to protect your practice. And then once we've done that, we probably spend 20 to 25 hours on the back and forth on the legal negotiations till we have a final lease, an executed lease for us to review, that everyone's satisfied with. I did want to just highlight just a couple of Google reviews. We have over 200 five-star Google reviews, but this one always stands out. This was a Dr. Omera Naz, 74 years of age, was forced to relocate his practice. Now imagine that, being forced to relocate your practice at 74 years of age. We were able to help relocate the practice and get the new landlord to cover 100% of the build out and costs, enable them to relocate and actually continue to practice, and then be able to sell that doctor space. Some other reviews. This is a client that's been working with us for 2.5 years. Incredible service. You know, we really do like to, we are there for the clients for the long term. It's not about a short term. Anyway, so what you can see here is one of the things that we do, and is what's called a critical dates and risk analysis, where I would normally spend 3 to 4 hours analyzing your lease for any sort of red flags, any liabilities, any areas of concern. I would then schedule a call, like I said, try and understand a little bit more about your practice, about yourself, and about where your specific situation, what you're trying to achieve, whether you're looking to sell, whether you're looking to extend the lease, etc. And then, you know, we would come up with a strategy, go through some of our findings, and you know, negotiate effectively a treatment plan. This has a value of $19.95. It's really beneficial. Everyone that I've had the pleasure to do this for said it was the best hour and a half that they've had on understanding about their practice and their lease, and how we can kind of align that together. Now, as part of as for you joining tonight's webinar, we're able to, as part of Tier 3 and Henry Schein, offer a complimentary personalized lease consultation. Myself, I mean, this is really on a first come, first served basis. So if you are interested, there is a poll that I believe will be coming on your screens soon, a final poll, just to understand again a bit more about your situation, if you are a tenant, if it's urgent, and if you are interested in the complimentary lease review rent analysis, which I strongly recommend. Like I said, we spend 3 to 4 hours just reviewing your lease, looking at the rents, looking at some of the market data in the area, and I would then, again, on a first come, first served basis, schedule a call, at least an hour, to go over your situation, and you know, see where we can assist. But strongly, it does get busy. There's a lot of people on tonight's webinar, so if you are interested, you fill out the poll. You've got my details are there. That's my personal cell number. You can email info@cirrusconsultinggroup.com. I would need a copy of your lease, or your existing lease, or any amendments as well. So I want to just leave some time behind for some questions. Now, I'm going to have a look if we have any questions. If you do have any questions, feel free to put them in the question and answer section. I'm just having a look at my screen now, see if there's any questions. Don't be shy, this is the time to, okay, here we go, some questions coming in. Fantastic. Great presentation, I appreciate that. So one of the questions here is, what are some of the frequent mistakes you see tenants make? Well, one of the most common things, which I can speak from my side, and Sevan can speak after, is especially after a presentation like this, the thing is normally to try and do some of this yourself and pick up the phone tomorrow to the landlord and start worrying and panicking about the situation. The problem with that we've seen is landlords are extremely savvy. They do this every day. And if you go on to them and start explaining your whole situation and give too much away, then it can become very difficult in terms of the negotiations. So I think one of the mistakes is that, one, people maybe try to do it themselves, and two, not having the experience and not understanding some of the value that you bring. I have so many people just say, well, my landlord, he's not going to do anything. He's never done anything. And I always ask the same question. Well, how did you ask? What did you do? How did you go about negotiating? And majority is, well, I asked for some rent reduction and the landlord said no, and that was it. So in answer to some of that mistakes is trying to do some things themselves. I mean, Sevan, I don't know if you want to speak from a transition point of view. I mean,
Yeah.
It's slightly different.
I think the flip side of that is thinking that you don't need to worry about it because, you have such a great landlord. It's going to be fine. I know I might have some of those things in my lease, but they're not going to do anything to the building or the space. So it'll just be fine. They just updated a bunch of things in the building or in the space or in the parking lot. So I don't need to worry about that. So I think the flip side is not thinking about it or thinking that you're exempt from being affected by this.
Yeah, I think that's a great point, because another common, not mistake, but a conversation where someone will have a relationship with a landlord and, an older person that's owned the building, and he said he's always done everything, no problem, never been a problem. And the problem comes when, the landlord, God forbid, is not around or passes away or sells the building. He's not too worried about that relationship. Somebody else comes in and, a new landlord, and you say, well, my old landlord, he just did everything for me, never was a problem. Unfortunately, what we try to recommend, if that's the situation, if you do have a landlord like that, then that's the greatest time to get everything you want, to get those wins. I can't tell you how many times people say to me that, well, my landlord's great and he always looks after me. And I'm like, well, one, you've been paying him, $5,000 a month for 20 years. I'm sure you'll be my best friend. And two, to be candid, you've got a terrible lease. So if you've got such a great relationship with the landlord, clearly it's not that great, because your lease is very landlord friendly and doesn't really protect your interests. So I think I hope that answers the question. I'm sure that there's some more. Okay, I got another question here, which is a great question. I touched on this a bit briefly. I mean, we do actually, so just so that everyone's aware, it says, if you do own your space, will an arm's length lease be sufficient? And what are some of the issues with this, if not? So one of the first things I will say is 100%, if you own your own space, you certainly should have a lease in place between the building and the practice to separate the corporation or from a liability standpoint. But also, if you may decide to keep the building and sell the practice, right? And if you do that, any future buyer is going to need to see a lease that's been in place for a period of time. And also, what sort of consent, what control do you want? If somebody comes into your space and you own the building, are you happy for them, to transfer the lease to somebody else? So again, we still always recommend, I mean, your accountant can go into a bit more detail from a tax perspective, which is slightly out of my remit, but I know from certainly you pay, one of your limited liability companies to the other paying rent, you can offset a certain amount of tax. But we would definitely recommend, if you do own the building and you're looking to maybe sell the practice and keep the real estate, or even if you're looking to sell both the practice and the real estate, then an arm's length lease, yes, it's sufficient, but not necessarily one that you might have just printed off from the internet. Any other comments? I think we're just coming up to just past 7 o'clock Pacific time. I just want to see if there's anyone else has any other questions. I do appreciate that everyone's taken some time in their evening, and I do want you to enjoy the rest of your evening. But if there's any other questions, I'm happy to stay on for a couple more minutes. Okay, I've got one more question here, and it's saying, you know, why would my landlord has never wanted to deal with a third party? Why are they all of a sudden going to want to deal with you? Again, another common question where, and I hope that if anything you've taken away from tonight, just the value that you bring as a tenant. And the landlord may say, you don't need somebody else, and I can look after you and I can deal with you. But again, it's about educating the landlord. So one of the first things that we do is just to explain, you know, we're representing the tenant. We're not asking for any commissions. We're not asking for anything from the landlord in terms of, we're just trying to, you know, represent the tenant who's extremely busy being chairside. And like I said as well, the likelihood is that they've probably got their own professional representation. So there's no reason why, you know, if the landlord says, well, you don't need anyone, or I don't want to deal with a third party. Well, you know, it's just about educating the landlord. And we've found that after an initial conversation, put them at ease in terms of what we're asking for, and just some dental specific language, that problem goes away very quickly.
I think there's that relationship piece too you mentioned earlier that I agree with, that having someone else kind of handle the negotiations, you're going to still continue to be a tenant to that landlord, and you want to preserve that relationship as best as possible. So kind of taking a step back and letting someone else go in to do the negotiations for you could really help that.
Yeah, it certainly takes away the emotional side, which we all know in any walk of life can get, you know, get a bit murky, the waters. But anyway, I hope that it's been beneficial tonight. Like I said, Sevan and myself are available, and please take up the complimentary consultation. We're happy to spend, you know, some more time on your specific situations. We really appreciate everybody's time tonight, and have a great evening. Be safe, and thank you very much again for joining us.
Have a good night.
Good night.